Hi, I'm Ewan Fletcher.
And I'm Glenn Sharp, and welcome to the March edition of the Sharp Accounting News.
At the March meeting of the Reserve Bank of Australia, the board chose to keep interest rates steady for another month. We're expecting an increase in the next 3 to 6 months, so factor this in for your business.
In the coming months, the state and federal governments will both hand down their annual budgets. There's normally some tax breaks and some other incentives in some of these budgets. Given where the economy's at and the general market conditions, we expect that there might be some benefits in there for businesses and for small business clients. Keep an eye out on the budget, and when it does get handed down, be sure to get in contact.
There are a number of changes coming to the superannuation space from July this year. The first one is mandatory superannuation on wages will increase to 10.5%. The second thing is, if you have employees that are earning less than $450 a month, more than likely you'll need to pay superannuation on their wages now. In addition to this, for those that are no longer working but are aged between 67 and 75, there may be an opportunity for you still to put money into superannuation. And finally, the downsizer contribution, which is when you sell your house, the age that can apply from has been reduced from 65 to 60 years of age.
Recently, one of our clients highlighted a significant problem that we see right throughout our client base and in society in general, and that's not enough insurance. If you haven't got income protection insurance, life and TPD insurance, and you're in your early working years, we'd suggest an insurance review is something that should be undertaken more regularly, and just to make sure that you're covered in the worst case event.
Inflation is becoming an issue for a lot of businesses out there, whether it's through your labour rates, material purchases, or even the recent fuel price hikes. Now's a really good time to review the services and products your business supplies and what changes you need to make to counter inflationary pressures.
We get asked a lot about self-managed super funds, and this is an area of specialty that we do have in the business. Self-managed super funds can be really beneficial for you in the long-term planning and especially long-term retirement planning.
Some really good news in the last month. Legislation has finally passed through to extend the temporary full expensing, or the write-off of assets you purchase for your business, up until the 30th of June 2023. So this has been extended for another 12 months on any asset value for your business.
The war in the Ukraine has upset the share markets right across the world, but they seem to have been recovering pretty well as well. What does this mean long term? Your guess is as good as mine, but I'm always reminded that the share market investing is a long-term game, and it's all about time in the market, not trying to time the market.